What's up, Trevor? I am Jonathan Smith here, and if you own a home or a rental property and you have not yet taken advantage of mortgage forbearance, maybe you, like many of the clients that I speak with on a daily basis, don't know if you can get mortgage forbearance, or perhaps you're fearful of the implications simply because maybe you just don't fully comprehend all the details and all that they entail. Please, I implore you to watch this video because it could help you substantially improve your financial position. And this is stimulus money that, well, folks, let's just say it could be a whole lot more than a $600 stimulus check our Congress has been fighting over for the last 9 months. Now, if you haven't watched the first video that I did on forbearance, you can watch that right here. The reason for the second video is really twofold. Number one, I've talked with so many people recently over the last few weeks that didn't know the opportunity that mortgage forbearance provides. They had a number of FAQs. And so I wanted to shoot a video primarily for my clients, but also I can't help but wonder if you are like them. You may have the same questions, and the opportunity that is given to you perhaps has not been seized just yet. Number two, forbearance will possibly end soon, and I personally don't want any of you to lose out on this opportunity if you don't have to. And so I've shot this video in the attempt to add value and help you. So what's really at stake here for many of you watching this video? Well, let me explain, and let's use an example. Let's say that your name is Chauncey, and as Chauncey, you pay $2,500 a month. Here's Chauncey, $2,500 a month in principal and interest, taxes, and insurance. And let's just say that of the $2,500 that you spend, $2,000 of that goes towards principal and interest. Now, if Chauncey here, if he stops making those payments for the next 12 months, what that will provide for Chauncey is a total of $24,000 over the next 12 months if Chauncey were to take mortgage forbearance. Let's assume that you only had to cover property insurance and taxes. And so worst case scenario, you save over $24,000 over the next 12 months. Now, if somebody told you that you could take that money and add it to the back of your loan, and maybe your loan has another 20 years left or so, well, Chauncey could take that same $2,400 and invest it so that Chauncey could be the type of person that multiplies their wealth, which is exactly why this channel exists, versus a person who I would call a burner, who burns through all their wealth, who this channel also exists for if you too want to be the type of person that multiplies their wealth, not burns their wealth, into something like Webull, which, by the way, is giving 2 free stocks when you deposit $100, link in the description below. But the reason that Chauncey does this is because he knows the power of compounding interest. And in this quick example here with our buddy Chauncey, we take a compounding interest calculator. I've already done this. You can do it on Google for free as well. If Chauncey invested that $24,000 at just 6%, okay, he comes up with a balance in 12 years of, guess how much money? He ends up coming up with a whopping $48,000. And forgive the horrible, horrible handwriting here. What that means for you is a 2x improvement on your money. If you invested that same $24,000 in the stock market at a 6% return, that would provide $48,000 for our boy Chauncey here in his effort to multiply his wealth. Now, why use 6%? Well, Chauncey knows what many people do, that the S&P 500 has returned more than a 7% annual on average for the last 40 years now. No guarantees that that's going to happen moving forward. But the point is this: if the future is anything like the past, then investing $24,000 and allowing it to get to work for you will multiply your initial investment, most likely 2x, and you wouldn't have to have made payments for the next 12 months. Basically, folks, it's like you just got a free $24,000 to invest so that in 12 years, you could have $48,000 and you be the type of person that multiplies your wealth, not burns through your wealth. You can be a Chauncey, not a burner. Now, how does forbearance work? Let's talk about the details here in case you want to be like Chauncey, so that if you were to take this action, you know exactly what this means, what you're to do, and some frequently asked questions along these lines. So number one, we've got to understand what the law is and what some of the deadlines are that are coming up. I'd encourage you to watch this entire video and watch it 2 times or 3 times or 4 times, however many you have 2 times, in order to feel comfortable and confident and clear on what your options are, what the implications are, and what this means for you. I will have links in the description here below so that you can consult any and all of the information that I'm pulling from to provide this to you in an essential fashion. So let's go to the CARES Act. You'll be able to see that right here. If you Google CARES Act, you can find it yourself, or you can just click the link in the description below so that you can see for yourself whether or not you should or shouldn't or can or can't take mortgage forbearance, so that you can if you need to. So step 1, consult the CARES Act, and you can find it, just like I said, either by clicking the link below right here, or you can just do a simple Google search. And you can look at the sections that we will be discussing so that you can be prepared when or if you do speak with your bank. And the primary page or pages is 210 and 211. Now, in order to qualify for mortgage forbearance with a federally backed loan, the law only requires you to attest to a financial hardship that is direct or indirect. And this is really broad, folks. I said this in the first video. I mean, an indirect hardship in theory could be something like I might lose my job in the future, or my hours might get cut. I don't know. Who knows what indirect or direct is? It's not defined, at least from what I saw in the law in the CARES Act. But you can always clarify this with your loan servicer, or if you want to talk to a CPA or an attorney, you can do that. But in the meantime, the law specifically says direct or indirect, and that you do not have to provide any documentation. In fact, page 210 of the CARES Act provides you with this exact information. So if we pull this up here, this is page 210 of the CARES Act, and what you're going to find on page 210 is this right here: forbearance during the covered period, a borrower with a federally backed loan experiencing a financial hardship directly or indirectly related to COVID-19 emergency may request forbearance on a federally backed mortgage regardless of delinquency status by submitting a request to the servicer, aka, or fill out a form on their website. And here you go, affirming that the borrower is experiencing a financial hardship. That's it. Notice down here, it actually says that upon receiving a request for forbearance from the borrower, the servicer shall, with no additional documentation other than the borrower's attestation of a financial hardship caused by COVID. And then on the next page over here, and with no fees, no penalties, no interest beyond the schedule amounts due, charge to the borrower, provide forbearance for up to 180 days, which may be extended for an additional 180 days. So this is exactly what the CARES Act states, folks, and you can read it for yourself by clicking the link provided in the description below, or by just looking at what I provided you here on this screenshot. Step 2, contact your loan servicer. That's the company that you make your payments to, and ask them if your loan is federally backed or not. By the way, 70% or so of loans are federally backed. So if you're 7 out of 10 people, the chances are that your loan is federally backed. If it is federally backed, you're going to have the best mortgage forbearance options. If it's not, then you may be subject to whatever the mortgage forbearance options your loan servicer has. Oftentimes, if your loan is not federally backed, you're probably going to have to pay back your forbearance money at the end of the forbearance term, which isn't great because that's kind of like you having a balloon payment at the end, and this play may not be worth it for you. So please make sure you understand what your unique options are. Sometimes these loan servicers will say, hey, you can pay back a little bit every month hereafter. Sometimes they'll say you have to pay everything. Sometimes they say, hey, we could do a loan modification for you. You've got to be careful with these. If at any point a loan servicer is asking you to sign a contract or sign to do a loan modification, be careful. Be careful. Those are big red flags. So if you have to sign something or you're being offered a loan modification, I personally would think twice about going down that road. The most ideal road is going down the path of having a federally backed loan, which you can either have or you don't have. And again, you can find out by calling the person you make your payments to. The number is on your mortgage statement. Just call them up. Hey, I'm interested in mortgage forbearance. By the way, is my loan federally backed? No? Okay. Maybe think twice about moving forward, and you can research more options if your loan is not federally backed. You can even ask them on the phone what options that you may have and see if those options work for you. Now, let's move on to step number 3. Whatever they give you, let me emphasize this again, whatever the bank gives you. Say it with me, whatever the bank gives you, make sure you get it in writing. Do not take anyone's word for it. They can tell you one thing on the phone and send you something totally different in the mail, and then you may be screwed, and that's not good. And I don't want that for any of you. You don't want to get screwed. Get it in writing, and don't stop making your payments until the bank secures this agreement in writing with you. Now, let's talk about some other important facts with forbearance. 1, multifamily. There are some other important facts to know with this. If you own a single family house and your loan is federally backed, you generally are going to get 180 days of forbearance with an extra 180 days. That's 12 months. If you have a multifamily property, you're generally, and you have to follow up with your lender, only going to get 30 days of forbearance with the option to extend twice, which means you're really only getting 90 days of forbearance. Again, some lenders can be different, but from the information I'm getting, this is what is consistent with multifamily properties. Taxes and insurance. If you're like most people that pay their taxes and insurance through escrow, in other words, through your mortgage servicer, you probably still owe your property taxes and insurance unless you get forbearance through the companies that take care of these, which means you should probably keep money aside to pay for that. And your loan servicer may end up charging you a larger amount when your payment resumes just to catch you up on property taxes and insurance for the year after you took mortgage forbearance. That would be normal. That's money you owe. That's not money you're taking forbearance on. Anyway, I just want you to be prepared for that. This is a concern that I have and many are having, is many people are taking forbearance thinking that their property insurance and tax payments are being made, and then they're going to be likely looking at a bill that is surprising. I don't want you to be surprised. Structure of the agreement. Let's move on to this next. What is the structure of the agreement? Now, for the next 12 months of principal and interest, you didn't pay like the $2,000 a month here that Chauncey's talking about in that example that we did earlier. You can generally request to have this money hooked onto the end of your loan. Now, be careful. Stay away from signing documents that say different things. Stay away from loan modifications, like I said earlier, and stay away from verbal agreements. Get these things properly documented in writing. As long as you can take this money and tack it onto the back of your loan, which you can do with a conventional loan, or if you have an FHA loan, that's going to be the best case scenario. Let's move on. Repayment. When you go to pay this off, it's most likely going to be when you sell the property or when you refinance the property. Those loans will get paid off, and that is totally understandable. So realize when you take forbearance, you're kind of wanting not to sell or refinance for a while so that you can take advantage of that. Remember, $48,000 in the example that we talked about, free money. Now, the longer you take advantage of that free money, the more benefit you can get out of it. But in the future, you're going to have to pay that original $24,000 back. And the only way it really becomes free is if you invested that money in a vehicle, a storage of value that is going to not just keep your wealth, but increase your wealth. I wouldn't recommend putting it into a savings account because if you understand anything about inflation, you are just allowing your money to melt away like an ice cube. And if you're worried or concerned or don't know what I mean, that's for a future video. But if you want to be like Chauncey and you want to 2x your initial investment, I would recommend looking into an investment vehicle that's going to grow your wealth, not shrink your wealth. And putting it into a savings account is shrinking your wealth. That's not a good deal. People don't do it. Now, length of forbearance option when it comes to single family mortgage forbearance. Generally, you have up until 120 days after the national emergency of the pandemic ends. The pandemic hasn't actually ended yet. So from the time of this recording of this video, we have at least 120 days if the national emergency ended today. So it's kind of like you still have 4 months after the emergency ends to request mortgage forbearance, something to think about because it's free stimulus money. Now, what about credit? And how does this affect your credit? When it comes to credit, you may see your credit score temporarily drop 30 to 50 points when you take forbearance. However, this impact tends to go away after a few months. I've tested this. A number of people have said that this is consistent with their experience. Your credit may take an initial dip, but comes back in a few months. Now, what about qualifying for a new loan or a refinance? When it comes to qualifying for a loan, after you take forbearance, you generally need to show, and you need to understand this, that you've made your payments for at least 3 months in a row after taking forbearance, and then you can generally qualify for a new loan. Again, confirm this with your lender, but this is important. Keep in mind, if you do take forbearance, you likely won't be able to refinance until you go through this period. So there is a risk reward factor here that needs to be carefully calculated for your unique situation, because this potentially means if you have a higher interest rate now, then what interest rates will be in the future, well, you might not get the advantage of being able to seize that opportunity because you're in mortgage forbearance and you haven't gone through the 3 months. And that's important for a lot of people because as of recording this video, mortgage rates are again at historic lows. The average 30-year fix is 2.6. The average 15 is 2.12. We are on the race below 2, and it seems as though we might get there in the near future. And if that's something you want to take advantage of, and that's more advantageous than being able to not pay your mortgage for 12 months, then that's something that needs to be weighed according to your unique situation. So be careful with that. However, let's say you're uncertain about the future and you want to attest to this and you want to get mortgage forbearance. Well, best case scenario, just avoid any possible ambiguity and do it. Again, it depends on your situation. If you just bought a home and you closed on that home in the year 2020, it is possible that you may have signed a document waiving your right to take forbearance. So go to that big stack of paper that you signed and see if there is an anti-forbearance form in there saying that you won't take mortgage forbearance. If not, you can always call your mortgage servicer and just ask them, and when in doubt, call and then confirm. Again, confirm in writing. Now, on a personal note, if you have no intentions of buying real estate or refinancing for the next 3 months to a year, in my opinion, there is really no reason for you not to take mortgage forbearance, assuming you can tack the amount owed to the back of your loan. It's essentially free money, people. And if you invest that money, then what you can do is 2x or possibly even more if you're looking into Bitcoin and Bitcoin sustains. It's a way for you to significantly improve your financial position. Now, folks, that is my personal point of view. I think mortgage forbearance can be a great option for so many of you, assuming all the things align in a way that fits with your unique situation. I hope this video is helpful. Again, links in the description below. Thank you so much for watching. And until next time, I'll see you then. Take care. Bye-bye.